Yeah, it's a funny thing. 2 years ago, you go to your family Christmas parties, and you'll be the only one talking about gold. But the last Christmas parties last month, everybody's asking, okay, what's your thoughts now? Is it too high? Should I buy?
Any one of those hits, it builds immediate value, and it probably unlocks somewhere 50, 80, $100 million for GFG.
You look at kind of the average price per ounce that have been acquired for oxide gold in Nevada. It's well over $200 an ounce. You need one drill bit, one assay back from one of these major targets, and the stock's going to get some rocket fuel behind it.
Good morning, good afternoon, or good evening, depending on where in the world you're watching from today. Very excited for today's session. Gold Gems, Junior Explorers Poised for Success. I've got with me today Sean Kingsley, CEO, President, Director at Gold Hunter, Brian Skanderbeg, President, CEO at GFG Resources, and John Sklodnik, CEO and Director of Nevada King. Real luminaries, good to see you guys. Hope you're all well.
Good morning.
Thanks for having us.
Awesome. Now, here's how today's going to work for the folks in the room. First, I've got some conversation starters just to get folks coming. I know you're not coming here for me, so it's mostly just to get people started. This is an interactive event, so please do use the chat button at any point during today's event to ask questions. I'm probably not going to ask questions about individual securities, but still feel free to put them in the chat. I'll make sure that the companies get them and can get back to you afterwards. But if you got a question that's on topic, I'm going to try to weave it into the conversation as much as possible or sneak it in towards the end. But if I don't get to your question, certainly we'll make sure that the correct teams get it, so still feel free to engage. The other thing I'll say is today is being recorded and will be available for replay likely at about 12:30 p.m. Eastern, so soon after the event ends. That'll pop right in your inbox. Feel free to share it, but it'll also be on Six's YouTube channel if you want to share it that way. So that is the boring stuff out of the way. I'm going to get right into making you guys give price predictions. So I hope you're ready for the fun stuff, getting right started off. Because I will say, and Brian, I'll start with you here. Gold forecast for 2026, varying from people saying a clawback to consolidation around 4,000, the best case is going to 5,000, 6,000. I say best cases, some people are a lot more bullish. And that's mostly from central bank demand, geopolitical uncertainties. How do structural tailwinds influence opportunities and risk-reward profiles for junior explorers like you guys? Brian, I'll start with you.
Well, thanks for that, Romeo. Look, for GFG, we've been in Timmins here for the last 7 or 8 years, and so we're a company that's established our base, have a lot of strong assets, a really aggressive program. But I think when you think about the big picture, it's ultimately GFG and many of the explorers have participated to a degree in terms of the gold price moves. And I am involved in some producers and developers as well, and those have generally outperformed some of the juniors. So I would say from a risk reward potential, the juniors offer an exaggerated return right now, increased and more positive risk reward, I would say. And this is really driven by discoveries are rare, metal prices are record, balance sheets of the producers and the buyers are at extreme levels or at levels that haven't been seen in a long time. And those are all drivers to say relevant discoveries, relevant assets are worth more these days. So taking GFG, taking my peers here, I would say we're in a great position from a risk-reward position. And if we looked at that on a 5-year time frame, looks great for us, and it looks great for investors too.
Awesome. And Brian, can I coax you into giving a price target for the year?
Yeah, I mean, when you think about what's taken gold to this level, those fundamental drivers are largely all there in varying degrees. Do you see geopolitical things evolving in the next year? They're going to evolve. Is it going to evolve in a way that's going to reduce the appetite for gold? I don't think so. And those that are buying gold are largely long-term holders. How much can producers adjust? Limited. How long does it take to build a mine? Somewhere between 10 and 20 years. I just think all those fundamentals are there. So if we sit at 4,000, 4,600 US, if we sit at 6,000, 6,500 Canadian, it's not unrealistic to see 5,000, 6,000, and you can see it in a hurry these days. That's the upside. Downside, maybe we see back to 3,500, but I think the days of 2,500, are long behind us.
I'm inclined to agree, and with ASIC sitting at 1,600, 1,800, it's a good business to be in. But Sean, I'll throw it to you just for your perspective on what the gold price means for junior explorers.
Yeah, in the last 12 months, let's say, it's been a different market we've been in for sure. I've been in the business for going on 20 years, and 18 to 19 of those years were tough. There's little blips and stuff, but we're in a very unprecedented market right now. Last year really saw a lot of capital coming in, a lot of generalists coming in. That hasn't stopped. It's actually trickling down to more of the advanced projects. Soon enough, it'll go down to more of the junior side of things. But definitely, we are in a very buoyant market in terms of capital access, and it's rightfully so. Pretty much, there's been no real capital deployment into our industry. My career, essentially, the majors have taken care of what they've taken care of, but it hasn't trickled down to making new discoveries. And our business in exploration is really forefront right now because the lack of supply, the geopolitical issues happening right now, and essentially we're just finally in the right place at the right time.
Awesome. And keep in mind, people will clip this for X.com, but I'd love to get you to a price target if you're willing to give one.
Oh, for sure. Prior, probably 2020, I did another interview, and I had some very bullish predictions, which I wish I had that clip because they all have come true. I would say, probably within the next 3 years, we're looking at Trump's tenure. We're definitely north of 5,000 within the year. I would imagine this year we're clipping past 5,000. But I hate to say it, but we're looking at let's say within 3 years, north of 7,500 for gold. Copper is going over $10 for sure. Silver, $100 seemed out of grasp and seemed very ludicrous only a couple years ago, but 150 for silver within that time frame too.
No, appreciate it. All my office fidget toys have gotten a lot more expensive over the last year, which is fun. John, I'll throw it to you for what you think current metals prices mean for juniors.
Yeah. I guess just first on the risk reward profile, like totally asymmetrical, I think right now for the junior explorers, where you have the producers making their first move, they trade around 1x NAV. You got these developers trading at an average of about 0.3, so a huge gap to close. Not that it's going to close entirely. Obviously, there's always that discount between producers and explorers and developers, but typically those exploration companies are the last one to make the move. So I think the timing's right for that capital to flow out of these producers, where you've got 200-300% gains. Probably some investors are looking to take a little bit of profit and look for the next ones to make a move. And I think us companies on this panel are ripe for that, to see some of those inflows. In terms of how it affects our business, just in June, we put out a resource update. I mean, I feel kind of silly saying it, but we ran our resource at $2,200 gold and $25 silver. That was a 3-year trailing average at the time. And that's kind of what had been done. Now it looks completely ludicrous to have done that, and don't expect to get down to those levels. But the opportunity is obviously, you can lower the cutoff grade with higher metal prices, and you've got a lot more resources that can come into a potential mine plan. So I think that's the opportunity for the junior exploration and development companies. That's a scenario for us. In terms of where the price is going for gold, I'd echo the views of Sean and Brian and see a lot more upsides. Don't see the trend of central bank buying receding at all. In fact, there's other key players coming in. Tether's been buying gold, the crypto or the stablecoin group, and so that's a huge amount of capital that could potentially continue to flow and support gold. Also, I mean, if there's still going to be a little bit of hitting on the integrity of the Fed, I mean, that's kind of massive. And so if you want to destabilize the US dollar, if that's going to happen, gold is going to absolutely continue to skyrocket. Hopefully it doesn't, because obviously that's a massively destabilizing event for the world. So in the case where it doesn't, and you see kind of Tether coming in with massive inflows and the central banks continuing to buy, I wouldn't be surprised to see $6,000 by the end of the year. I was surprised to see us approaching $5,000 by the end of 2025. So I'd be comfortable with that.
No, fair enough. And yeah, it was quite censorious to see Chairman Powell on TV saying, "I'm being targeted by the president." You don't see that every day. It's certainly news. It's hard to keep up with news sometimes. When I'm writing panel questions, I'm like, I might wait until the last stage to see if anything else happens. One thing I'm going to throw everybody in, Sean, I'll start with you here. It's given everything we've talked about so far, how can junior gold companies position themselves to really be as attractive as possible for people looking to diversify their portfolio? Like, what's the work you consider for you as a CEO of making that as appealing as possible for folks looking to make bets in gold exploration?
Yeah, it's a funny thing. 2 years ago, you go to your family Christmas parties, and you'll be the only one talking about gold. But the last Christmas parties last month, everybody's asking, okay, what's your thoughts now? Is it too high? Should I buy? In the exploration world, we're explorations at heart. Our discoveries are what drives our passions, and essentially, just like literally, I'm just trying to think, like, in the last 2 years things have changed so much, but yet it still remains the same. We're still out there doing the same things, but I think the markets or the general public is starting to realize. So my only leaving thoughts here is essentially mining and minerals are essential. We're surrounded by it. It's how our world works. If it's not grown, it's mined, and it's so important. I can't emphasize as much as I need to, but our world is driven by metals, and the spot prices are starting to notice. So that comes down to exploration. It's harder to find mines right now. You got to look elsewhere. You got to look deeper. You got to utilize technology. We have advanced so much and so fast in the last 5 to 10 years that, as Brian said earlier, mines usually take 10 to 20 years to put online. I think that's going to be fast tracked, not just with the technology, but with our capabilities, but also access to capital, and also governments getting behind it. Especially you look at Canada, the Canadian government has pivoted their position to now, how do we move these projects forward? How, like North America is like, let's go. So, exploration is going to be a very hot sector for the next 5-10 years, and I'm just looking forward to it.
No, appreciate it. And you mentioned going for Christmas. It's funny. This is the first year my mother asked, you work near gold, right? I was like, that was the first time I worried about a top. So my mom mentioning it stressed me out a little bit. But John, I'll throw it to you for what you think gold explorers can do to be as attractive as possible in this market right now.
Yeah, I think the way we're thinking of it is we've got two levers to pull on. And the first is, I think, de-risking the current 1.1 million ounces that we have. I think getting a re-rating on those ounces. And we're looking to do that through continuing to, do the biological studies, archaeological studies, make it as seamless a transition for, a potential suitor for those resources, potentially show economics later in the year as well, which obviously, we've seen some studies out with a base case of $3,000 gold and upside towards spot. So I think that's one lever. But, we're similar to Sean, we're an exploration story. I think that's a real way to do it. We're fully funded for our phase 4 program, and to really supercharge our story is going to be through discovery. We want to have a bit of a conveyor belt where, as these targets advance, they move into an infill program, and we're there with one of our targets. And then we want to backfill it and just continue to find where the next ounces. And, with the Caldera hosted setting, we're going to continue to look around the margins of that land package for more of these deposits.
Awesome. Thanks, John. And Brian, I'll throw it to you for what can juniors do to be as hot as possible in a frothy metals market?
Look, it's really about making that discovery. And I like John's analogy to say, look, there's two levers we can pull here, and GFG is no different, where if you can take an advanced deposit, an advanced system, migrate it towards a resource and start demonstrating economics on it, that's a great way to take, $2 an ounce to $10 to $20 to $50 an ounce in terms of value and lock for your shareholders. And behind that, take the punts, take the risk, go out and test 5, 6, 7, 8 really good, strong targets. And if you compare these two business strategies within a single budget, that's how we're really trying to target it. I think our shareholders in the market is investing in us to drive discovery and to demonstrate sizable resource that have some economics. So if we can advance both of those, maintain some really aggressive messaging and marketing and presence and engagement with new shareholders, I think that's how we're going to capture and build value. But it's really about driving discovery. So if we can be aggressive, that's really where we're focusing our capital. Take our best targets, give them a kick with the diamond drill, and if they're not there, move on, take the next one. And if you can put 5 or 6, 8 targets through, that's what we're trying to do. Really laser focused on discovery.
Awesome. Appreciate it, Brian. Now, I do want to get into some individual questions about each of your stocks. But first, somebody from the chat wants me to scare your IR teams and talk about politics for a second. So Barry asked right near the beginning, what can Canada do to support the industry like Trump is supporting it? So I'll kind of change that question a little bit, talk about how you feel your jurisdictions have changed over the last period to be more supportive to the mining industry, or where you think they can do better. John, I'll start with you as the American project on the board here.
Yeah, I mean, I think Nevada's done a great job historically of supporting mining and gold development, and you've got all the infrastructure in place, got the talent and skills, got all the service providers there. So from that standpoint, it's done a great job. The one thing I think where, the team at site and us as a management team would like to see is maybe a bit more resources put towards the permitting groups. Obviously, I think the government in the U.S. has been looking to scale back federal level spending. So that has had a bit of an impact on the Bureau of Land Management, which is the permitting organization that we deal with specifically. But overall, love the way things are going. The Fast 41 has been great, and we've seen other projects advance and move forward through that. Just that clarity of permitting timelines, if you get into that program, is huge. So we've been, thrilled. Obviously, we're in Nevada for a reason. Continue to be a very stable, safe jurisdiction, and not expecting that to change going forward. So like what's been happening, and think that will continue. Awesome. Appreciate it. Sean, I know you already mentioned Canada's kind of increasing its support for the industry, so I'll let you expand on that here.
Yeah. I'll focus a little bit more about Newfoundland.
Right.
Newfoundland's a bit of an anomaly. Like, we're far east on the eastest coast of Canada. And essentially, I've been going to Newfoundland for like the last 14 plus years. Newfoundland's such an amazing province. Just looking at, the last 14 years, I've kept in touch with all the geologists, prospectors, companies active in the province. And I have to say, Newfoundland's the last frontier. Pretty much the prospectors have done such a great job on the surface, but not enough companies have gone and actually drilled to make new discoveries. That's starting to change. That has started to change already. If you look at the last 2-3 years, over $5 billion worth of M&A has happened. I worked in the Golden Triangle in 2020 for about 4 or 5 years, and that had about $5 billion worth of M&A and $5 billion worth of infrastructure. I see the government of Newfoundland really beefing up the infrastructure, with companies that are now in production, such as Equinox and the Valentine deposit. Firefly is making a strong case to put the Rambler and Ming mine back into production. And that's just going to increase the infrastructure, with the deep sea port access. So Newfoundland government is an amazing government to work with. They understand that the mining and mineral exploration industry is a huge influx of capital and supports resources for the province and the communities. So I just think that's only going to increase with, the Canadian government really making that shift, that paradigm shift to where, how can we as Canadians be more independent? And I think it's just going to be fast tracked. So yeah, I'm really excited.
Awesome. Brian, I'll throw it to you for just talk about jurisdiction.
Yeah, I'll focus first on the capital side of the equation, and we do have a great advantage up here in Canada, and it's flow through. And so each year this gets renewed, and this is a great advantage we have over almost every jurisdiction in the world, is that the cost of capital is reduced because of the tax incentives provided both nationally through the government, but also provincially through an individual jurisdiction like Ontario. So when we think about what the government can do, they're already doing a lot on the capital raise side, and they've shown a commitment to do that, and that's greatly appreciated because it does lower the cost and risk within our industry by having that on the capital market side. When you think about the permitting side, we work in Timmins and Ontario and the Abitibi in general. Immense amount of infrastructure historically developed there and new mines being built all the time. I see good alignment between the Fed and the provincial jurisdictions on how they're advancing permitting timeframes, and they're doing their best to expedite projects that are maybe not of national interest, but only provincial interest, and simplify the permitting path. And if they are larger projects, then they're combining their permitting process, which I think is all positive. I think in Ontario and in Timmins in particular, we work in one of the best jurisdictions in the world. We get a permit in 45 days, 42 days was our last permit we got. Wow. Submissions through consultation, and have dialogue with our First Nation partners. We have consultations, we have agreements in place, and we get things done. So I think, board and the provincial government doing exceptionally well. And I think the federal government's even doing their best to prioritize and advance and really take advantage of where we are in the cycle of opportunity and in best interest of Canada.
No, appreciate it. Now, I know there's lots of good questions in the chat, but I got a couple of just individual questions for stocks that are represented here today, and then I'll get to some of those great questions in the chat. First, I got one for you, John. With the significant resource growth achieved in 2025 at Atlanta and that fully funded 20,000 meter phase 4 program, looking at those regional discoveries, Silver Park East, Atlanta South North, Western Rim, how do all these steps position the project for further expansion and better economics in the current environment?
Yeah, it's part of our general plan where we're looking to, advance these targets towards potential resources. And Silver Park East is the most advanced right now. With that phase 4, we're doing an infill drill program right now, looking to get that to a resource step. In terms of how that affects the project, I mean, it could be huge to have that satellite deposit. First of all, Silver Park East, as the name indicates, has got a higher silver component to it, near surface as well. So, depending on how this plays out, this could be kind of, moved to production at the front of the mine life. Get those ounces out front, just given the near surface nature of that oxide deposit. Just adds a ton of flexibility, really. But most importantly, just being able to grow that resource base, you're spreading that initial capital over more ounces. So that's obviously going to have a huge impact on your MPV and your IRR when we get to that stage of things to show what the economics look like. So that's where we're at with Silver Park. The other targets, we're looking to move towards that and get to an infill program by the end of this phase 4. These ones are a little bit earlier stage, but at Atlanta South, I mean, the team at site is, really thrilled to start attacking that with the phase 4 program. There's a Carlin type of deposit. So it's hosted in this Pocanip limestone, which is a similar host rock for other major gold deposits in Nevada. So the team was excited to attack that one. I think I'm most excited in terms of, elephant potential at our Western Rim target, where we've seen, kilometer long quartz veins with gold and silver. We've got grab samples up to 21 grams per ton. In terms of some of the geophysical work we've done, it really stands out as a huge anomaly. So Atlanta South and Western Rim, these footprints dwarf the size of the Atlanta resource zone. So this is where, if these things hit, the stock's can get some rocket fuel behind it. I'm not a geologist, but I really like Atlanta North. It's a long trend along that mineralizing fault to the north. We've had some good hits there, 0.3 grams per ton near surface. There's exactly the type of thing that we're looking for in this gold price environment, another satellite deposit to tack on. So really, we've got 5,000 meters allocated to Silver Park East to delineate that resource and potentially expand it beyond the current footprint. Hopefully, we'll have that update out. We'll have some drilling update from Silver Park East shortly, followed by Atlanta South, and then towards mid-year we'll be getting into Western Rim. So these are the areas, but in terms of how it affects our project, just being able to move targets towards a resource stage and then to be able to add satellite deposits on just has a massive impact on flexibility and economics for the project.
Awesome. Appreciate it. Brian, I'm going to shoot it to you. So I know you've got the phase 2 drill results at Aljo, the launch of that pretty aggressive regional exploration program across Gold Arm. Really, how are these building on your district scale potential out there in Timmins?
Well, right now we have 3 rigs active, and 2 of those are a sonic rig, and one of those is a diamond rig. And so this is the pairing of the programs that GFG has designed. One, to go out there and test, those targets that are at a drill ready stage, whether it's Aljo or whether it's Nahani or the Fournier. These targets that we've done work on, we like the concept. It's drill ready. We're going to go do it, and we're doing that with a diamond rig right now. And then we're looking at, we have 15 kilometers of really prospective structural corridor here in the right rocks under anywhere from 20 to kind of 40 meters of till. And these areas have not been looked at. And what do I mean by that? I mean, you can go 3, 4, 5 kilometers and find one hole drilled on them. And these are right on structural corridors outbound to Timmins. So the sonic approach is really meant to go out there and find the next gold system underneath there, where generally you're lacking that good geochemical data that you'd find in a shallower environment. So we're really excited. I'm personally, really excited at both the sonic and the diamond programs testing this area of Gold Arm. And, winter's a great time for us to go and do some work. We have some targets that are a little wetter. Those have frozen up in Timmins. There's been a ton of snow there, but -20 right now. And what that means is it's just really easy to get the sonic rig around out there and get ourselves some sample of till and bedrock. So that's what we're really pushing on. We've got a few results from Aljo yet to come. Expect those in the next week in terms of communications, some drill results. And Aljo is our most advanced target. You're going to see us do more drilling there. We're building the models, building it towards a resource, and there's great data to talk about on all those 3 fronts. So for GFG, advancing Aljo, testing the regional targets, and building the pipeline, all ongoing right now in Q1. It's a great time. We're busy.
Awesome. Busy's good. Busy's a good place to be as a junior explorer. I'll throw one to you, Sean. So at Gold Hunter, I know you've recently deployed AI machine learning with Windfall Geotech to generate those high probability targets ahead of the Q1 drilling. I'm just curious to let people in the room know, may not be familiar, how does this technological approach change exploration efficiency and help you de-risk?
Yeah, dealing with a very large district scale project, that we consolidated last year, it is a large project that has a lot of data. We're talking about nearly 500 drill holes historically, 35,000 soil samples over fractions of the property, along with 7,500 outcrops, a lot of data points. So, if you look at it as layers, we just finished our VTEM a few months ago, flying the entire project. That really helps us. Not only, we do have a resource base where we have 3 historic resource areas to the north, and then a resource or just a resource to the south, along with a past producing mine from the 1900s. So we got a base points in regards to where we know gold is. Plus, we're looking at 35 kilometers of strike length along a major fault structure with splays coming off of it. We know these splays are gold bearing on surface because we got over 50 kilometers of identified corridors on surface that 95% of them have not even been drilled yet. So coupling in AI made a lot of sense for us. The snow in Newfoundland has come down. So it really helps us narrow down where we need to focus, not just in the resource-based areas to expand those, which the VTEM really helped identify that they are expandable at strike and at depth, but also there's other correlated corridors that haven't even been identified before that we're seeing in the VTEM. So next week, we get to be presented with these AI targets. So I'm really looking forward to that. I talked to Windfall Geotech this morning, and they're super excited. They're like, this is a really exciting thing for us. We want to put our name on it as well, too, because we really believe that this is going to help you focus in not just the resource areas, but doing the regional discovery targets, coupling in the VTEM AI. So, systematic, with such a large package, just really, I'm echoing now, but just really focusing in where we can focus on the resource areas to expand those, but also make new discoveries. Like we have 15-kilometer fault structures or splays coming off the main faults that have been identified but haven't been drilled. So having some AI targets on those as well too. The market is really appreciating new discoveries, as we know with GFG last year. But really, drill results are actually moving the needle for all of us in the exploration discovery game. So I'm really looking forward to seeing those targets and really getting out there this month to start drill testing and ground truthing them.
No, appreciate that. Yeah, it's not 2022 anymore where good results are we'll see what happens. There's usually a actually predictable market move from good news now, which is different. Now, I got a couple follow-up questions for you, but there's one that I wanted to get to just straight from the chat. It's a question I always like to get because I think it gives you all an opportunity to talk about what's next. He says, look, it's great to be optimistic. It's great to be bullish about metals prices, but we're here to make money. Fair enough, Mike, from the chat. So I want to ask each of you what you think is going to actually move your share price this year, just so investors can have a sense of what they can expect for what's coming up and what will actually move the needle. Brian, I'll start with you if you don't mind.
Yeah, if we go drill 10 or 11,000 meters this year, which is what we're trying to do, our budget's around $5 million in the ground. And, with that money, I think it gives us a really good chance to take Aljo to this next step of saying, what's its size, what's its scale, continue to grow it. It allows us to take, some of the regional targets that we like right now and go out and test those. And I do think that one of the things you're seeing right now, and my peers talked about it, is just that relevant drill results get noticed and they build value. And if GFG can come out and show we found another gold system in the Aljo area, even if it's not like, a screamer grade, I do think that given the eyes on this space, given the progress of our peers, given the free cash flow of the belt, that will really build value. So for us, it's the regional diamond drill testing program of 5 or 6 targets. Any one of those hits, it builds immediate value, and it probably unlocks somewhere 50, 80, $100 million for GFG. Second of all is showing the regional fertility from the sonic. So even if we go out there and show, look, we've got a broad geochemical anomaly, and shareholders hate us talking about geochemical anomalies, but that's how we find new gold systems. So if I can get excited and get behind a new area and target that's showing the right fertility, we will build value off that. And also on the Aljo side, if we continue to show continuity and depth and growth at strike and depth, that'll move the needle for us. I think GFG is traded flat. I think we've underperformed some of the sector over the last 6 months for a few reasons. But I do think we're primed to really build value here with the programs we have in front of us.
Awesome. Appreciate it, Brian. John, I know your stock got a bit of love mid-December last year, but what moves it up to the next step, do you think?
Yeah, I did take a peek at the chat and see there's a bit of frustration and just want to echo, us as a management team, management and insiders own almost 40% of the stock. So 2025 was a very frustrating year for us as a management team, for shareholders as well. I think it was necessary. We had to rip the Band-Aid off. We had to put a resource update. It's a high quality resource. Obviously, there were elevated expectations with the drilling that happened. But at this point, looking forward, we ripped that Band-Aid off. We've got a high quality, high grade resource out there in Nevada. Fortunately, we haven't had to tap the market and suffer through some dilution at those lows. We're back to a level that is somewhat reasonable. I think there's just a lot more to go, though. So in terms of 2026 and looking forward, I think there's a huge catch-up trade, which is just in the early innings to close the gap both to our developer peers, but also just the sector overall. Like our ounces are trading at kind of head-scratching levels, a little bit absurd in my view. So we've got our work cut out as a management team to help close that gap. As I mentioned earlier, part of that is de-risking the ounces that we have. But really, it's going to come through discovery. I know that retail investors weren't loving the grades at Silver Park, but this is exactly what we're looking for: oxide, near surface, satellite deposits. So we've got a couple catalysts coming up, including the fully funded drill program. We're going to be putting out assays. Hopefully that we get some hits there at Western Rim, at Atlanta South, Atlanta North. The infill program, obviously we've got a greater degree of comfort with that, given we've done a certain amount of drilling there already. So we've got some big catalysts, big cash upgrade to come, big valuation gap to close. And, as tough as back half of 2025 was, There was no dilution. So if investors are holding through it, the best times are still to come. And I expect 2026 to be a fairly transformative year for Nevada King.
Oh, good update. Thanks, John. And I will say, just before I get to you, Sean, for the dozen or so people who just got into the room at the halfway mark for the hour, you can use the chat button on the bottom right of your screen to ask questions during today's event. I'll make sure that the executives get them afterwards. Sean, I'll throw it to you for what you think is going to move your stock this year and make some investors some money.
Well, I made the mistake of checking out the chat. But yeah, so for anyone online that doesn't know, when we came out of last year, about a year and a half ago, a big exit for all of our shareholders at that time. We sold our previous consolidation to Firefly, which at today's value is about $60 million that we gave 85% to our shareholders as a direct dividend. So it was a big win a couple year and a half ago. But this new pivot, I'm really excited about this project we had. Yes, we don't have the valuation baked into our current $10 million valuation for sure. We are about to close our second tranche financing next week. I would imagine Wednesday, Thursday, or Friday, the latest. That is currently at about $2 million. And so we raised $1.2 million during Christmas, if you can believe it. It wasn't an easy feat, but for sure, everyone's out with their families and whatnot. But we closed 1.2, so we'll have about $3+ million. So I imagine starting almost immediately, we're going to be putting the plans together once we close the second tranche. I'm hoping for up to 10,000 meters of drilling. This will be our first phase 1 drill program since we consolidated this land package. It is a large land package, a lot of data, a lot of efforts, starting with 300,000 ounces. And this is like high grade, like we're talking about on the northern side, drill intercepts of over 100 meters of 1 to 2 grams, starting from surface down to shallow 200 meters, and down to the south side at Thor, we're looking at 27 meters of 8 grams, starting from near surface. The AI is really going to help us. If you know Newfoundland, there is a overburden anywhere between 5 and 10 meters. So AI and VTEM is really going to help us focus in on those areas that we can make those new discoveries and expand those resource areas. So I'm really excited to get launched. Actually, it's a better time to start drilling in these early months. As the snow is down, we can move the drill rigs with snowmobiles and sleds. So we're at the early stage of the Lassonde curve, unlike my peers, Brian and John's company, where we are starting our very first phase 1 drill program. But we have a lot of foundation to work with, and I don't think the market really justifies what we've acquired or what we've achieved so far. So I'm really excited to get those drills turning. I expect to have 1 drill rig focused on the resource expansion, especially at Thor. Thor has a tremendous amount of immediate ounces adding to that resource area, but also going after these VTEM/AI discovery targets, 10, 15 kilometers away from the main fault structure. So yeah, pretty much looking back at the chats, we have made shareholders money last year. My average cost, I've invested nearly $300,000 as of next week into the company, and my average cost is over pretty much almost double the share price today. So I understand, trust me. And as CEOs, we pound the pavement. We work hard. Like, I have a nonstop schedule from starting next week out in Quebec and Ottawa, just pounding the pavement, getting in front of investors, telling the story. And I think 2026 is going to be a big year, not just for Gold Hunter, but for GFG, for Nevada. Like, it's just going to be, it's go time. And so I'm sure all of us as CEOs, we're capable, able, and we work for you as shareholders. And it's go time.
Awesome. Yeah, this is the fun time to be in the business. Paul from the chat echoes, Newfoundland is hot, hot, hot. Give you 3 hots with an exclamation mark. So I thought I'd throw that out there. So 3 things I still want to pose to all of you. I want to talk about funding. I want to talk about M&A, and I want to talk about tech. And hopefully if there are any other questions from the chat, I'll try to get through them. I do want to talk about funding for BICs. I know we've all talked about different placements you guys have run recently or trying to avoid dilution. I'm curious your perspective on, with the current market, what challenges are there or opportunities that are different from previous years in securing funding, partnerships, et cetera? And how can you basically leverage your recent advancements to be as desirable as possible for that funding? John, I'll throw it to you first.
Yeah, I think in terms of funding, we are in a bit of a gold bull market here, and there's better access to capital than we've seen before. Nevada King's in a fortunate position to have, be very well backed. As I mentioned earlier, about 40% of the stock is owned by management and insiders who have been kind of driving a lot of the funding previously. But recently, we've been going outside and bringing in new institutions, and we've increased our institutional ownership from effectively 2% to now around 15% over the past year. And these institutions can really only come in through financings. It's too difficult for them to get a meaningful position by buying on the board. So I think there's certainly access and interest and demand from institutional groups. But also, I mean, there's, it can be a bit of a burden, I would imagine, for a producer. I mean, great, you're generating a ton of cash, but your shareholders, you're not owning these companies to get exposure to cash in a bank account. I think as that cash and that the treasury builds for these producing companies, as does the pressure, as their cash is building, their reserves are depleting. So we've got a number of CAs in place. We've got conversations going with producers, and they're more, I think, interested in having those conversations than they've ever been. And I think that there's an interest for them to deploy that capital, whether it's funding exploration for juniors or making acquisitions if they like the project. But I think that's something that's been an issue through that gold downturn where these companies weren't investing in their own exploration. And now I think that they're looking at different projects, and I'm sure the other people on the panel can echo that sentiment that there's a lot of interest, I think, with the cash balances rising from these producers. So I think that's a kind of relatively newer dynamic at play in terms of fundraising.
Great. Sean, I'll throw it to you next, as you're currently in a placement. What's the funding environment like now, and how's it different from previous periods?
Well, if we look at Christmas, we can't really count that. But since Christmas, it's been really good. It takes a lot of effort still as a company trading, prior, a sub $10 million market cap. But I have noticed just in the last 2 weeks that the institutions and funds that were focused more on the developers and producers and the $50 to $100 million market caps are starting to go down the food chain. And so I'm having some amazing calls with the desks at certain firms that really like the story and want to get behind on it on the early stages. So it's a great time to be kind of where we're at before we're starting our phase 1 drill program. Yeah, and just touching on the M&A again in Newfoundland, like you look at Eldorado Gold investing in True Gold last year. Some mergers happening with Newfound Gold acquiring Maritime. Firefly, has raised in the last 2 years for a project nobody cared about 5 years ago. Firefly has raised over $500 million in the last 2 years on that project that nobody cared about last year. So in Australia, which they're an Australian company, Australia, they have a lot of risk capital out there, and I'm starting to see that come in. We have Australian investors now too, because they're starting to associate ourselves with a lot of upside in Newfoundland and Canada in general. So more capital is available. I'm seeing names and individuals and teams that really in the last 20 years, you see blips of them. 5-8 years ago, if you go to a brokerage firm, there might be 1 or 2 brokers that focused on mining. The rest of them didn't really care about it. That's changed a lot, and it's only going to change even more, and there's going to be more capital. I'm really interested in the retail side of things. I've focused a lot of my efforts into Europe, and I see a lot of appetite out there increasing. I think it's just going to get compounds over the next several years, and so we're all in a great place.
Awesome. Yeah, the funny thing about Australian investors, they think North American share counts are impossibly low. They're so interested to see how low our share counts are. Brian, I'll throw it to you to talk about the funding environment.
Yeah, I think my peers have hit on the big points. With GFG, we really cultivate two big pools of capital. One of those is the corporate side, and the other one is the high net worth side. And institutional plays a role, and it's certainly building for us. So those three are big ones. We probably disproportionately focus on the corporate side. We have some really good shareholders, three of them in our corporate structure, and long-term supporters aligned with us in terms of a business plan and generating immense free cash flow. And you can just look at the landscape of Timmins and say, look, there's $4 billion being made in the greater Timmins region this year, and that capital needs to find a home. And yes, some will be back to shareholders, some will be into your own assets, and some will be into your other assets. So yeah, look, remain really positive. I would agree with Sean. The European market, retail market, really receptive to smaller scale stories, potentially more than the average North American retail market. Getting institutions into the smaller cap names like us, 10, 50, $100 million is never simple, but I do find that those PMs, those managers of those funds, are more receptive to smaller scale names than they were 6, 12, 18, 24 months ago. And they're more receptive because they've owned, the KNTs and the Discovery Silvers and the Westhomes of the world have been 4, 5, 8, 10 baggers this year. Okay. So their assets under management have blown up, and in a good way, and they're looking to deploy that. So, I do think, as a CEO and as a junior explorer, we need to cultivate all those and definitely feel like they're all very receptive, and it's definitely an open market to go and be aggressive and engage with the capital raises to be aggressive on the exploration front.
Awesome. Now, I know Sean already touched on M&A, but I want to talk about it more fulsomely, just in the context of each of your companies, because I get, audience will ask in almost every event, when do you think the M&A wave is coming? I think in a lot of ways we're already seeing it. And Brian, my question to you is, in this environment, how is GFG attractive for things like JVs, mergers, or even acquisitions?
And we do put them in those three baskets.
Sure.
When we think about, some of our properties, and we only have 800 square kilometers in Timmins, and, we have to spend about $1.5 million a year to maintain those tenements. Not all of them fit into our pipeline. So a JV or optionality or even a sale of assets is certainly something we consider and have advanced dialogue on and are active with. And the logical peers and even producers would be potential partners for those. So very active on that front. When you think about the landscape of an MOE or a corporate transaction, I do think there remains to be too many juniors out there, and A, it's just, proportionally getting the most dollars in the ground, but B, it's just give the best teams the most money. And so I do think that this consolidation framework is, and more M&A within the junior space is happening and will continue. They're not always easy to execute, but it is something we look at, and we're always looking at how can we be most efficient at making the next discovery, and that is A, being good technically, and B, finding the lowest cost of capital. So if we can do both of those, and M&A is a good way to do that. So look, really active. There's lots of eyes on Timmins. There's a couple peers that are really strong people and explorers as well, and maybe there's a corporate transaction that makes sense. And in the interim, there's certainly appetite to look at option style deals and joint ventures within our landscape, and we have both inbound and outbound dialogue on a number of those fronts. Very active on the corporate development front.
Great, appreciate it. John, I'll jump to you next, and we'll talk about it in all those three buckets. So mergers, acquisitions, and JVs. How does Nevada King think about them, and how are you attractive in each one of those buckets?
Yeah, I think when you got a high-grade oxide resource in Nevada, I mean, it's fairly attractive in any market cycle, particularly this one. And in terms of M&A, there's plenty of interest, but, we're just not in a valuation position to really be, getting too deep into these conversations right now. You look at kind of the average price per ounce that have been acquired for oxide gold in Nevada. It's well over $200 an ounce, and that's taking the numbers going back to 2022. So obviously we're in a different gold price environment. We're trading at a little over $60 an ounce. So we've got our work to do before closing that valuation gap. But yeah, I think that if we continue to have success with exploration, The feedback that we're getting from mid-tiers is, they'd like to see 1.5 million ounces. We're at 1.1 right now. The 1.5 million ounces kind of gets to that critical mass of annual production over a 10-year mine life. And we think that there's plenty more gold endowment on the property. We've got the Caldera hosted setting. The Atlanta resource exists along that Caldera on the margin of it. Silver Park is on the margin of it. Those are two past producing mines. So we're going to continue to look, and hopefully we've got time to continue to build up the ounces before the valuation gets to an appropriate level and those M&A conversations get advanced.
Thank you, John. Sean, same question.
Yeah, echoing John, it's way too early for Gold Hunter to really even consider. Our previous consolidation, yes, we sold it to Firefly a year and a half ago, which was a great move. But with this project we have now, it checks all the boxes. We're surrounded by infrastructure. We have a hydroelectric facility with power lines going down the middle of the property. We have a road in the middle of the property, deep sea port access 3 kilometers away. Highway access right below our project. We're surrounded by infrastructure. Not only that, we're looking at this as an analog to Valentine. Valentine gold deposit 10 years ago was kind of where we were at today. And so in those 10 years, they've turned it up to over 5.3 million ounces in production today. Largest Eastern Atlantic gold mine. So we are very, very early stage for what we think this could be. It checks all the boxes in regards to same rocks as Valentine, same geological structure as major fault structure that we control 35 kilometers of. They have about 30 kilometers on their property. So super early. We're essentially tasked, how can we do what they did at Valentine within 10 years? How can we do that here at 5 years? So, just looking at systematic exploration, doing the VTEM, doing the AI to really fast track. We don't want to spend as much money as it took to get to where they are today. But how can we show the market? How can we show potential M&A partners that this could be the next Valentine? And so really it's just focusing on that, focusing on expanding the resource areas, but also making new discoveries, and eventually those valuations could make sense. But in the last 3 years, all the M&A happening in Newfoundland, it could happen sooner. There's a lot of money out there, a lot of money with the majors, so there's going to be a lot of M&A in general across the whole landscape of our industry. But yeah, I'm just focused on making sure we replicate the historic results we got, expand the known areas, and make new discoveries.
Great. Now, I know we're getting towards the end of the hour here, and I got 3 exciting stories we've talked about from a bunch of different angles. But there's a ton of people in the room. I just want to give you as clear an opportunity as possible to let folks know why they should take a look at your stock this year. So I'll give you each an opportunity to just basically, and I always tell people, be as un-Canadian as you can here. Feel free not to be modest. Talk about why investors should take a look. John, I'll start with you.
Yeah, I mean, this is a company I covered when I was in equity research and just love the story, both the jurisdiction, the grade, but really it's the exploration upside. And the team put this land package together, not to find 1.1 million ounces, but really to find, something of critical scale. We see potential for far more ounces. We'd love to be able to have the opportunity to get to 5 million ounces or so. You look at a Round Mountain, which is the best analog for us. They've now got 25 million ounces delineated, and that's the other Caldera-hosted oxide system. That's about 250 kilometers away from us. So don't expect we'll be able to get there with our team. Probably get acquired if we're having that level of success. But really, it's in terms of 2026 to invest in Nevada King. You're getting hopefully a re-rating on the ounces that we've currently delineated, as I mentioned, but also a fully funded 20,000 meter drill program, both infilling the Silver Park to potentially get to a resource stage, but also looking for those elephants. And you need one drill bit, one assay back from one of these major targets. And the stock's going to get some rocket fuel behind it. So really excited here for Nevada King for 2026 for both a catch-up trade and some meaningful catalyst to help close that gap.
Stellar. Sean, I'll throw it to you.
Yeah, so we've taken the time since we consolidated and further consolidated this land package. We de-risked it in the sense that, you know, doing the VTEM, doing the AI, to a point where we're now ready to launch our phase 1 drill program of up to 10,000 meters, which will be fully funded next week. But, you know, it's an exciting time. You know, the market kind of beholden to us that we needed funding, we needed to raise money to drill with the question mark. So it kind of kept us capped at the current valuation. Just based off of our land package, I think, you know, we should be already multi valuation compared to today. But, you know, we'll let the drill rig do the talking. And I think, you know, we will see a very, very exciting 2026. That's all I'll say.
Love it. And Brian, I'll let you have the last words. Tell folks in the room why they should look at GFG this year.
Yeah, I think, you know, it's ultimately the time we're going to go out and test some of our best targets we've ever defined. And we've got the balance sheet to go do it. We finished the year with around $7.5–8 million cash in the bank. So we're well financed to go out and put an 11,000 meter program together, both on advancing a resource scale target and taking a first test of 5 or 6 other regional targets and generating the next wave of targets behind it. So, you know, I think GFG is set up pretty well. We've underperformed over the last 12 months and you know, I'm a participant like all our shareholders, and I see an immense amount of upside and a catch-up piece and trade that we have in front of us. You know, ultimately, we're set up to make a great discovery, and we're set up to make that in the next 2 quarters. And that's what's going to move the needles. And that's really what investors want us to go do. So really excited. Pay attention, look at the press releases for us, and hopefully catch up to everybody at either Roundup or PDAC or reach out if there's any questions.
Awesome. Brian, Sean, John, thank you so much for today's conversation. Thanks for everybody in this room. I know there was a lot of you. If you think of the perfect question to ask right after the event ends, as I know some people do, myself included, or if you want to meet with any of the executives here, please do let me know. But otherwise, thank you all so much for a great conversation. I hope you have a great weekend.